Hi, welcome to the FX Blueprint. Today we're looking at the Australian dollar versus the United States dollar, so the US dollar. In front of us, we have a day chart. If you watched our last video, we had the whole market there, so no analysis whatsoever, and then we just dissected it and broke it down using our diagonals. We use our Fibonacci to obviously establish our what? Establish our horizontals. We're able to match that with our golden ratio of 61.8. If you're a beginner and you don't know what a Fibonacci is or Fibonacci retracement is, please just type it on Google. Hey, what's a Fibonacci retracement? That will tell you, hey, Fibonacci retracement is a tool that's used to find a retracement of an impulse phase after a pair goes on an impulse phase. So, for example, when a pair goes on an impulse phase, I'd call this an impulse phase. Why am I calling this an impulse phase? Because there's a huge change in price in such a short amount of time. What do I mean by that? If you look along the x-axis, time changes. The y-axis, that's the price change. The price changed drastically in a short amount of time compared, if you follow my star cursor, from here to way over there. The price hasn't changed that much. The price has only fluctuated by 420 pips. If you look at my cursor, remember last time when we were going through our videos, we said get familiar with your platform. If you're using CTrader, you're using TradingView, you're using Metaphor Trader, whatever it is, just get familiar with it. Trust me, you'll be in a better position. The change in price over here has been like what, 420, 480 pips. Let's just say for mathematics sake, 500. And the amount of time, this is from January until now. Whereas on this other side, from January going backwards to ninth month is what, August, right? August, September. So September 30th, which is practically October, 2 months, the price changes by over 700 something. So for mathematics sake, we'll say 1,000 pips. Small amount of time, huge price change. Lot amount of time, small price change. Now, this is obviously a retracement. This is a retracement of this leg. So it's fair to assume that the overall trend, the market is going down. Why is that interesting? Because the market has been consolidated over here. You can clearly see the pair has been consolidated in this sort of retracement phase right here. What we're going to do today is come down, see if you can find an entry point, be it we're buying or selling. Either way, right? Now our analysis says, hey, over here we owe to sell. Right? So we're going to break it down, look at it through a day, through what? Through 4 hours, time frame by time frame, time frame by time frame. And then we can see exactly what's going on and try to put our entry points. And like I say, if you're interested in learning about Forex, we have a Telegram channel that you could use, that you can look at. So please feel free to check it out on our YouTube channel. Hit the link, get to our Telegram. We have materials where you can look at stuff. So getting right back to it, this is what we're more interested in. This market is very, there's a lot of noise in this AU pair. I call it AU for short. So Australian dollar versus US dollar. It's a lot of noise. So what I try to do when I do my analysis is use a line graph a lot, just so I could block off some of the noise and see where the market is going. And just as a highlight over here, you can see the trend, big overall trend in a day. That's the big, I'm going to try and zoom it in. That's the big channel in a day. And you can clearly see where the market has stopped over here up top a few times, once, twice, before it went down there. And if I just put 4 hours, and then I'll put back the candles, zoom it back out a little bit, and then we can clearly see what's going on here. I like the structure over here, and what we're more interested in is what's going on here. Again, the market is already broken. This is a live market. You can clearly see that. So I like what's interesting over here. I like what I see over here, because some traders will call that a head and shoulder. Yeah, bear with me. I'm going to highlight the head and shoulder, okay? I'm going to put an hour over here so we can try and block off some of the noise that we see. See, once you put an hour, you can now see how much your lines are better making sense. Yeah, just to walk us through what's going on. It came from this channel down to the bottom of the channel. and now the market has stopped midway. Yeah, zoom out a little bit for reference. All lines are valid. Here's our horizontal right here, channeling things down. So you can see the market clearly came from up here, went down, came back, and established a what? And established some form of, and broke, I'd say it broke a support level, because this deem line, why I put it deem, is because it's constantly getting broken. If you look at the market going down, it breaks it all the way and respects it on the way back before it breaks and turns it into a what? Turns the resistance into a support. And now it almost turned into a neckline. So if you look at an hour, I'm going to highlight this as a neckline. If we're saying, hey, this is a head and shoulder. This qualifies as a simple head and shoulder, yeah? This qualifies as a simple head and shoulder. Okay, we're going to do this. This is our right shoulder. Sorry, our left shoulder. And then it goes all the way up to our head. Right, again, this is you're only able to identify the stuff if you can get your lines right. You know, again, you can get your lines right, because this is just simple Elliot wave analysis, right? Right? We can label these. Let me just finish the head and shoulder for you guys. These are our head and shoulder. Usually on the head and shoulder, if you look at some of the properties, I think it's important. You know, when you start off, you look at the technical bit. Like if you say you get a paper, especially in our channel, we provide you with a PDF on just technical analysis. You know, where you're looking at candlestick charts, candlestick patterns, and then these charts, like these are called chart patterns. These are for short, like, hey, a chart pattern, that's a head and shoulder. Yeah, what happens at a head and shoulder? You seeing, for example, if we're putting labels on this, we would say, okay, if the market started right here, because that's where our bottom is, that's where our support line for the channel is, would say, okay, maybe the market, let's say we're assuming the market maybe popped right here. We're just going to label these real quick and delete them. We say, okay, this is 1, okay, and then say this is 2. I'll tell you why 2 is over there, right? Because this is a sharp decline and almost looks like it's 61.8, right? This sharp decline right here comes down to 61.8. Again, Elliot Wave is a lot more work than just 1, 2. There's rules and regulations, right? Like, you know, the known ones, if you're a regular trader, you know, hey, wave 4 does not have to be traced to the territory of wave 1, right? There's always alternation when the stuff is what? Alternation between the correction of wave 2 and the correction of wave 4, right? So you're looking at 1, 2, 3, 4, 5. Having 2 and 4 as your corrective waves, and then having, I'm just going to do this again. You see the head and shoulder, so that's done. 2, and then let's say we put 3 right here. You see the head and shoulder, so that's done. I'm just going to rearrange this. So it's almost drawn like an Elliot wave. 2, all the way to 3, before we establish 4 down here. Oopsie. We establish 4 right here. So we have 4 here, and then we decide we're going to have 5 here. 5 here, right? Now, just like you would have an ending diagonal or a flag or a pennant or whatever the case may be, all those things are captured in Elliot wave analysis, right? Even within this wave 5 right here, we can calculate waves within the wave 5. So for example, we could have an extended wave 5. So what does that mean? There's an extension within wave 5. Go on Google, you can see the stuff. Go on our YouTube channel, we'll provide you, go on our Telegram channel, we'll provide you with the necessary materials. Okay, over here, I'm just showing free analysis, which is, hey, here's what the market is doing. Whether you're trading or not, it's constantly going to be moving. Okay, whether you're trading or not. Okay, all right, this is obviously head and shoulder. You can see the right shoulder. The market is obviously losing momentum to go up. Over this side, it's a lot more choppy. It's a lot more violent, I would say. Whereas over this side, it gets a little more choppy because it's getting ready to descend, right? So this would have been our waves if we're highlighting that. And then now we're recording an A, B, maybe C is all the way down, right? Maybe C is all the way down depending on your level of trading. I'm just going to get rid of these real quick because our interest is on those candles right here. This is our interest. We love consolidations, especially when they happen around our pivotal areas. We love consolidations. So I'm going to get rid of this. It's 1, 2, these are just the numbers. I will, by the end of this, show you just a quick snippet of Elliot Wave analysis. I like to do the stuff before I show it, or sometimes even do it while we're looking at it because it just gives a better picture of what's going on. Again, there's a shoulder, that's the head. All right, and our interest is right here where the market has bounced several times. Right, the market came. I'm gonna grab my cursor, came all the way here, broke this. Oopsie, looks like we need a you can clearly see if you look at the purple rectangle right now, our market just broke that when New York opened. And the question is, where are we looking to go, right? The first thing we want to do is, hey, can we see how far this right? How far was this head retraced by this shoulder? So we're looking at this distance from here to here. How much of this distance was retraced? Okay, because that will help us know where the market is going. We can be able to apply a Fibonacci extension, right? So if I grab our Fibonacci, here's our starting point from the toughest price. We say, hey, our Fibonacci says we got between the region of 50, right? If we got within the region of 50%, 0.5. So half of the data was basically what retraced. The pair retraced half of its data. So now, if we grab an extension and say, hey, because we're 50, and like sometimes certain retracements tend to correspond with certain what? Extensions, right? 50, and 200 are likely 61.8 and 161.8. This time we retrace at 50, right? So what I'm going to grab is a rectangle here, and I'm going to try and just grab the golden extension because the golden extension happens to be in line with the last time the market stopped. And so I can confidently say that, hey, if I open this trade, it's most likely, well, the trade is already open. It's most likely to end up down here. What does that involve? Patience. Now, if you're a swinger, this is beautiful. Just leave that thing alone. If you're not a swinger, you're a scalper, you want to get into the smaller time frames. You're looking at 30 minutes right here. You can clearly see there was a consolidation. I've highlighted this as a retracement. We can easily put a label here, say, hey, you know what? We want to put a label that says 50% retracement. Okay, retracement. Okay, we put that label that says 50% retracement is right here. Okay, now we're trading here in my Telegram channel. What are we looking at? We're looking at ourselves putting a line saying, hey, if the trade goes beyond this price, we'll put it like this, take a left label. I think a left label is much better. You guys, if you've seen our previous videos, you already know. Okay, maybe that doesn't work. We grab a right label and say, hey, the price if the price goes up there, this trade becomes invalidated. Invalid. Invalid. What does that mean for you? It means that if I'll just change this to red so I can highlight the invalid. It means that if the price goes beyond this point, like if it retraces to that point, the trade is invalid because the market structure is broken. Again, this is simply following market structure, like we've said time and time again. Yeah, simplicity gets the job done. You may want to put your harmonic patterns, which are a thing, right? Harmonic patterns are a thing. chart patterns, I think, like we've just used. We see a head and shoulder, we see the neckline, we've highlighted where it's going, and we can see, let's see how many pips that is. Okay, we have teasers all the time. I love teasers. So I'm going to just grab one of the cells here and see how far we're going. So if you're a scalper, you already know you're signing up for 50 pips. 50 pips, that you go home. You move your stop loss down and you're done. You're a swinger, that's a good amount. Will this market retrace all the way down? Let me go back to 30 minutes so I can make this visible only in the smaller time frame. I'll just do 15 minutes. Only in the smaller time frames. I'll do the same thing over here. This is going to be quick. This is quick. This is quick work. I like this. Right? So what we're saying is, hey, once the trade with that invalidation, once the trade goes above that, hey, let's invalidate that. You know what I mean? Because the market structure is now broken. We're not following what we've analyzed. Yeah. Extra confirmation, 80%, 50% retracement. It's down on a support level. Support levels get broken right before it breaks. Chances are it's gonna come back. Right? It's broken now. It's gonna come back, retrace, and establish this point as a what? As a resistance. Yeah. So that's AU in an hour. This is AU, Australian dollar, and the US dollar in 30 minutes. This is the Australian dollar and the dollar in 15 minutes. And obviously for scalpers, this is 5 minutes. Yeah. All right. Like I promised earlier, we'll look at some updates. I'm just gonna go through some updates of gold. Here's gold. Last time we analyzed it, you can clearly see what's going on here. It's in our rectangle. So if you are a trader and you like what you see, this is important right here. If you're a beginner, grab a book, jump on our Telegram channel, get materials to learn. This is gold. No pun intended, but this is gold right here. You know what I mean? You can clearly see the thing moving through the channel. You can clearly see, if I zoom it out, block reds, 4 hours. You can see what's going on. Moving through within the channel. Right now, it's right at the bottom of our channel support level. This is an excellent buying spot. You get onto anybody's channel who does technical analysis, they should be telling you, hey, put your buys, or hey, maybe put your sells, maybe this is gonna break. Because all we do is follow the market. We identify potential retracement zones or pivotal areas where the market is gonna turn around and we trade them. Okay. Now if I move back, I'm gonna put a day, just move back to my old analysis here where I last analyzed this. Because interesting enough, when I stopped analyzing gold, it popped all the way up and it never went back. Isn't that crazy? So here's the last time I analyzed gold, and this is what I'm going to do with these other pairs, okay? Elliot Wave analysis. Elliot Wave analysis. It doesn't get any better than that. All the data, be it it's a channel. Look, here's our channel. Here's my channel. Channel is highlighted, right? 1, 2, let's see what 3 is. 3 is right here, 4 is right here, 5 is right here. What am I talking about? Hey, there's waves within waves. Let's look at 1. Within 1, there's, just going to walk you through. 1, wave 2 over here, wave 3 over here, wave 4 over here, wave 5, a retracement of A, B, C to establish the correction, right? A, B, C was established in what? I'm going to make this bold so you guys are able to see. I'm just going to, I will remove it, but it's old analysis regardless, so, right? This ABC is what's being used as what? A correction, right? There's a correction. Again, we've established wave 2. Where do we go? We're going to wave 3. 1, 2, 3, 4, 5, which completes what? Wave 3, right? There's a wave within the bigger wave. Now we're going back to a correction because we've got to establish wave 4, and wave 4 doesn't come to the price territory of what? Of wave 1, right? Remember the alternation? Well, I can't say remember because I haven't shown you this material, but in Elliot Wave, when the corrections happen, remember wave 1 is an impulse, wave 2 is a correction, wave 3 is an impulse, wave 4 is a correction, right? Let me just highlight this. Wave 1 is an impulse, wave 2 is a correction, Wave 3 is an impulse, wave 4 is a correction, wave 5 is an impulse, and then the market corrects again, right? Have a look here. So wave 4 is a correction. These corrections, wave 4 and 2, they alternate. Either one is sharp and one tends to be flat, which means one retraces 61.8. Usually that's wave 1 because that's the initial movement of the market, right? It needs to retrace so it can establish ground. So for example, if you look at our wave 2 right here, I grab my Fibonacci. This is gold, by the way. We're looking at gold over here in 4 hours. It's just to highlight our Elliot wave analysis, something we're going to get into. I grab this and try to retrace. Wave 1 almost retraces to 61.8. That's 61.8 of the data. You go 10 steps forward and you come back at least 6 steps back. That's propelling yourself to move forward really sharp. Now, wave 4, if we look at the retracement of wave 3 by wave 4, you'll find it's about 38.2 or very close. And this happens all the time. Okay? So that's it for today, okay? What we're trading was AU, and we just happened to tap into gold to give you a little update of what's going on. If I put an arrow here, I would easily do this. If we break, we're going down here. Boom. Easy money. Going back to AU, here's what's going on. What you want to try and do is take your stop losses, put them up there. And then again, going back to that example of, hey, how would it look like in the channel? We would put a price that looks like this and say, hey, we're buying at 0.48 and we have our stop loss at 0.4951, right? Make it tight. Your analysis needs to be good. Pivotal areas, the noise is there, but your analysis got to be good. Analysis is going to be good. All right, you guys take care. Have a good one, okay? If you're new, please hit the subscribe button. Stuff is scattered all over right now, but we'll get it together, put it together as we go. I'm trading live markets, okay? Nothing else. No demo.